Okay, happy Friday. It's August 27th here, Glenn Stein, Realty Executives, Ocala and the Villages, and want to talk to you about affordability today. We're going to look at affordability. We're going to be looking at whether the Ocala market in Marion County is an affordable market or not. We're going to be looking at what's available. We're going to be looking at inventory. We're going to be looking at what's taking place in the Marion County Ocala market. And I'll tell you this, like so far, I'm doing this on a weekly basis. So if you want to get a heads up as to what's going on, please subscribe to this channel, the Ocala Real Estate channel. Also, if you have questions about what's going on in the market, like real live stuff, you could actually look at our website here, buymidflhomes.com, buymidflhomes.com, and that will give you information on what's available. So if you're just browsing along, it'll ask you for information, it'll ask you to register, but we're not going to spam you and we're not going to harass you. So it's nothing weird, right? Like, so check it out if you have any questions about what's going on in the market. But I am going to be doing these informational type videos every single week, so you know what's going on, what's happening. A lot of people are nervous about real estate or just curious about real estate, and that's perfectly okay too. And if you have questions, you could also leave that in the chat section here. You can post a comment, or if you have questions, whether it's obviously we're doing this live, so if you have questions now, that'd be great. If you don't, and you want to comment later on, that's perfectly okay. So I'm monitoring that as well. So the first thing I want to tell you is that inventory has picked up. You know, what we saw about 2-3 weeks ago, we were in the low 900s in Marion County. And now we are currently in the upper nines, 900 number. So we're going to look at that. Let me show you what's going on there. This is what we're looking at right now, 978 properties on the market. And we talked about this a couple of weeks ago, where most of those properties are going to be in the 200 to 300 range. There are some properties you can still buy something for just under 200, but it's becoming a little bit more difficult to find something that is under 200. So if we look at this a little bit, we start, that's the upper end right there. And obviously there's a lot of properties that are going to be over $1 million, which is a real change. I've been selling in this marketplace since, year 2000 is when I first got my license, and was a productive agent for 5 years, and then started the brokerage after that, and started to mentor and coach and train agents. And but I've been keeping my pulse on the marketplace for the last 20 plus years. And what we're seeing right now, we've never seen before, but it's also something that's been very, very predictable, right? Not too surprising that the market has picked up in the way it has, just because we're seeing so many more people that are moving into our area, whether it's, COVID reasons actually assisted with that, but also, political reasons. And, we saw a lot of people moving in this area because of, baby boomers retiring, that type of thing. So one thing I do want to show you, we reviewed this before, but I want to show you the historic count of active listings. That's going to tell you about inventory and just give you an idea of what we're looking at. Okay, so essentially, this actually is saying it's above 1,000. It's actually, right now we're under 1,000 properties that are currently on the market. Let me show you the data here. So giving you an idea, here's historic count of active listings, right? This gives you an idea of what the inventory has looked like, which is basically, properties that are coming on the market. So that gives you a real idea. I mean, look at 2016, January 2016, 4,900 properties on the market, 5,000. Back in the day, I think we were seeing 7,000 to 8,000 properties on the market. And this was back in the 8, 9, 10 period. And then obviously, the market has picked up, inventory has dropped, but we didn't see a significant drop in inventory until really last year. As you can tell, we dropped into the 2,000 mark, and then finally in the 1,000 mark. The big push in real estate, there was a big push last year in some markets, and then there was a bigger push this year, in the beginning of this year. And what I want to show you is, this is going to be very interesting when we look at, some of these trends. We're going to look at some national trends, and we're going to look at what exactly is not only happening nationally, but what is happening locally as well, and what's the difference in these markets. Okay, so let's look at this. So I'm going to do a share screen with you here. So this particular slide here is a nationwide national look on affordability, and it really does reflect what's been going on in our community as well. When we're looking at the Affordability Index, looking at January, February, March, April, May of this year, this is according to NAR, National Association of Realtors, the Affordability Index. So what's happened this year, obviously, we've seen a dramatic demand for inventory, right? Like going in this direction, inventory going in this way. This is where I guess geometry back in high school would have paid dividends for all of us, right? Like the graphs. So increase in demand, increase in pricing going up, decrease in inventory, basic supply and demand curves here. So look at this affordability index. So when we're looking at January of 2021, 186, really what we need to do is compare, it's basically going to be a comparison. So this gives you, pretty much a 20% decrease in affordability from January to May of this year, right? So this tells you the curve for affordability in our county, in our nation, and also very reflective of our county, where this index has, gone down, right? Like it's become less affordable. Now, on the surface, that may seem like, oh, okay, well, obviously, things have gone up, so things are less affordable. But there is a thought throughout, not only through our community, but also throughout the country, not only in Ocala, Florida, but in Florida, but in, around the United States in the Southeast and Northeast. Certain markets are going even more bananas than what we've seen, even though we have seen a little bit of a plateauing, which is what I was alluding to before with the inventory going up. I think what we're also seeing with affordability, if we're looking at a curve of this being a curve of slightly going down, I think we're now starting to see that it's coming up, right? It's coming up a little bit more than what this would indicate in May. So I would say that what we're going to see moving forward in July, August indicators and moving into September, this is going to be probably somewhere around here, a little bit more affordability going on. But I also want to show you, comparatively speaking, where are we in the whole scheme of things? The question would be, are we the least affordable? Like obviously the prices are the highest they've ever been in this marketplace, even, past the, the heyday, the frenzy back in 04, 05, and 06. What does that mean for affordability moving forward? Because a lot of people, there are a lot of first-time homeowners. There's a lot of people that are, they're looking to retire, and maybe their budget is not as high as what you'd like to see in some other areas, and obviously that could be an issue. So I want to look at this particular slide here, and make sure you're seeing it. Let me do a share screen again. Sorry. So we're going to look at this particular slide that shows housing affordability index pretty much from 1990 to today. And then once again, this is the nationwide index. I'll tell you about some similarities in our marketplaces. Let's start with 1990. First of all, remember that pricing is an indicator in affordability, but it's not the only indicator. When we're looking at affordability in a marketplace, or affordability of anything really, especially in housing, we're looking at how much money are people making, okay? Salaries, that's an issue. Also interest rates, right? What are the payments? What are the payments on a particular home? So one thing that's going against us in this marketplace is obviously, looking at pricing. Pricing has obviously gone up and actually has doubled over the last couple of years. But something that is also very helpful is with the influx of jobs, and especially in the Ocala area, when you're talking about, Amazon, Chewy, Dollar Tree, those types of things, and some other FedEx, right? There's been a big influx in jobs, and also interest rates being incredibly low, even lower than last year. And we thought they were incredibly low last year. People are able to get a really low rate in interest rate right now. So, but let's take a look at this. This chart here says a lot. It really does. So when we're looking at this chart, from 1990, a housing affordability pretty much probably the lowest on this whole chart next to '06, right? So obviously it's affordability went up. I think, interest rates were high. I don't remember what they were back in this time, but they were higher interest rates, low salaries, especially in our area, but around the country, lower salaries, even though pricing was low. So, you basically had one out of three: pricing low, interest rates high, salaries lower than what they are today. Okay, that's basically what you're seeing. Plenty of consistency from 1993 all the way through 2002. Now, in our area, what started to happen in our area is that pricing started to go up. So, with that in mind, interest rates were a little bit better, but the salaries were probably still pretty low at that time, or lower, much lower than what they are today. This is what we get. Like, housing affordability went through an incredible trough. And when you're looking at, '03, '04, '05, '06, this is also the heat of the marketplace. Prices going through the roof, interest rates being okay. But really what we saw here is really just a time period where everybody was buying everything, but banks were lending money, mortgage companies were lending money to people that probably didn't deserve it, in a high rate, right? I can tell you a lot of stories about what I saw back in the day. For instance, I'll tell you a story that we had one buyer that was buying new construction homes, and it was one buyer that would put it in their family, each 10 different family members' names, and they would buy each new construction at $1,000 down. And for $10,000 they tied up 10 homes, and then they flipped the homes, and typically they would make about $25,000 to $30,000 per home. So they made a lot of money until they got caught holding the bag. So we saw a lot of that. And then, of course, because of that craziness, guess what? Housing recession, real estate recession caused the economic downturn. We know it happened in '07 and '08, right? And then now you're starting to see affordability pick up because prices now are going down. Okay, so we're seeing prices go down, and then now we're seeing the affordability index now go higher and higher, right? 115, 138, affordability getting better in '09, 10, the same, and 11 and 12 just the peak in affordability. So really big changes here in affordability. The peak of affordability back in 12, meaning interest rates low and prices rock bottom, and maybe some salaries were picking up a little bit. Now we're looking at the affordability index. Now that prices start to rise a little bit slowly, normalcy, right? This is the bottom of the marketplace. Now we're seeing almost like an inverted curve. Now prices kind of stabilize for, we saw what we looked at with inventory in Marion County, Ocala, very stable. This is kind of what we saw for that 5, 6, 7 year period. And oh, by the way, during this time period, not much construction going on, which lends itself to why we're having inventory issues now. Demand is high, but we had a 5-year period of hardly any new construction, right? So now you're looking at this very, very consistent 18. Prices did jump up a little bit there, so a little bit of a spike in pricing, and then some normalcy, and then craziness, obviously, in pricing, a little bit of a difference here in affordability. So normally, if we were just depending on pricing, affordability would be probably down here, like really, really low. The saving grace in all of this is interest rates. That's what keeps things relatively affordable still, even though prices have gone up. So really the question of, okay, are things affordable? They're not as affordable as what they were last year or the year before. They're more affordable than 2018, and pretty consistently affordable with anything after 2012, right? I think slightly less affordable, but not a major difference. And pretty much the reason is interest rates being at record-setting lows. That's really the big deal here. That's the difference maker. So when I think we need to understand. I think a lot of people think, okay, well, are we getting priced out of the market? If you're paying cash, maybe that could be a thing. And then we're seeing that, like where you were able to, 5 years ago, you can find a nice little 3 bedroom, 2 bath in a pretty good area for 140, 150,000, and now it's over 200,000. So cash is worth a little bit less, and inflation's a different issue. But when we're talking about financing, people are finding it better to finance. And I'm not saying that's the way to go. I'm a big believer in eliminating debt, but people are finding it easier, and they're really jumping into financing and finding things more affordable than maybe 6, 7 years ago, or at least as affordable, even though the prices have gone up. So with that, we're going to be really watching the marketplace really closely. If you have questions, you can connect with me 352-572-3796, 352-572-3796. And please subscribe to this channel so you can be notified of any updates that I bring to the table. I'm Glenn Stein, broker owner of Realty Executives in Ocala and the Villages. So happy Friday, everybody. Hope you have a fabulous